The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 14th day of November. My pleasure to be here, and spectacular week last week. A little give back today. That's what we expect. And when I said to subscribers, we anticipate with the Friday Chapman wave trend gauge flashing that could be overnight, but we should see a 9 to 11 point E-mini rally that should reflect some kind of positive cash index upside action this morning, and then we should start to see it giving it up. After this kind of a move, you'd expect some kind of a digestive phase. So the E-mini is right now at 2155, down 675. What we're looking at, there was an incredible move from 2028.50 to 2180.50. And that was almost like that was a single A to the upside. Now we can expect some kind of a pullback. Huge support at 2141. And this is what's fascinating to me. See this, we always talk patterns here. Remember, I always like to say that a rectangle formation can last a lot longer than your patience. Let's see if this rectangle formation, the 120-minute chart with the Chapman wave C1, C2, double top at 2180.50, that area, and let's see if that low of noon on the 10th at 2147.75 holds today. Okay, so we just stuck in this little range right now. Looking for the 10-minute chart. I'll just quickly show it because I usually forget. Here it is. There's a left side, right side price time match going towards the low that was made at 310 on the 11th at 2153. And we're real close. We're at 2154 right now. So with that said, if it takes that out, it'll go deeper down, and then you can expect at some point, maybe by tomorrow, we could test that 2148, 2147 area. Meantime, there could be another little arch formation a little later in the day. There's some kind of rally attempt yet again, and that says 2158 to 2161 is going to be very strong resistance today. All right, enough with that. Let's get on with our nitty-gritties. Thank you to our hosts. Great programming all morning since 8 o'clock this morning. Let's go on with the, hopefully I can do the same thing here, and then you'll go on till 5 o'clock this afternoon right here at TFNN.com. So let's go to the Dow. And this is going to be fascinating. What we've had is a huge divergence. The Dow and the Dow stocks are really formidable right now. You have 5 financials. That's a little too much. There should be maybe 3. But anyway, there are 5, and there's some pharmaceuticals, and there's all sorts of things. But it's a beautiful mix. I love the characteristic of the Dow right now. It's up 4 at 18,052. Had a high this morning of 18,934. I'm getting so close to the 19,000s. And I suspect over the next 2 days, the support will be in the 18,750 to 18,730 area. We've made a leg E to the upside in the 120-minute chart. Time for a little bit of a rest. Now, this is fascinating to me. In the longer term, we've got a leg D in the monthly chart. In the Chapman wave methodology, you try to identify the lowest low bar and merely count each successively higher peak. And when you get to D, that's where you can start to think of a yellow light flashing. But what's really important about this, we don't know if it's an F or an A in the weekly chart. So we can just step back here and say that so far everything's very positive. But when we look at the SPX.X, S&P 500 index, it failed to break above 2193.81, the high that was made in August. And what's really interesting is that if it makes a new high by going to 2183.82, 1 penny above, it starts leg C. And that says to me, because of the Chapman wave methodology, we should still see higher highs to come going into 2017. A little later in the week, we'll start talking about the similarities and the dissimilarities between now and the Reagan time. I've already spoken a little bit about that. I'm seeing somewhat more disparity than confirming the genesis of an entire brand new move, as we saw in 82 and 83. That would be incredible if we had to start something like that. Now, a lot of work has to be done, but it is market positive at this point. Why? Because in a sense, rates have been freed up a little bit. I haven't yet pulled completely my Japanization of bond yields. Is this the tidal turning point? Yeah, it could very well be, but I need a little more evidence before I can say that. However, let me go on, and I'll show you something very interesting. So the S&P's lag, Dow's leading, S&P's lagging a little bit, but look at this. The QQQs not only are lagging, but they're fading yet again today, down at 1.42 at 114.41. The NDX power shares. Wait a minute. Well, this is a peak B in the monthly. I could call it F/B, but I'm going to stay with the B for the monthly. But I've made a big deal about it being an F in the weekly chart, and that invariably suggests that if at worst there's a timeout, no, I'm saying at best there's a timeout, and at worst it goes lower. So I'm watching this very closely. You cannot have the general lead the troops if the troops aren't going to follow. Yes, you have got the IWM, the Russell 2000, acting pretty well. Single leg A, great action today, up 1.97 at 129.33, up 1.55%. Is this a brand new leg A or an old F in the weekly chart? I'm not sure. To me, everything about it says that this is a brand new leg B in the monthly chart. In the Chapman wave methodology, I have to stay with that right now. So far, this is all very positive. If you go to the IWB, it's lagging, and it needs to make high above that peak B for leg C at 122.03, trading at 120.35. And what's really interesting, if you look at the New York Stock Exchange, the New York Stock Exchange is lagging very badly. And this is the broad 2000 stock index. So we're going to have to watch this. I believe that the Dow is telling us with the XLF that it's a new characteristic. But I can't really look at the XLF in the sense that it was reconfigured, and I have to go to the BKW, Keith Brewer, BKW. Why do I always have trouble with it? KBW. Oh no, my bank index, BKX. BKX. How did I get off track like that? Oh, dollar BKX. Let's get there. Come on, it's enough messing around. There it is. This is a leg F/B in the daily. I'm inclined to call it a B, but it's a leg D in the weekly. There are other ways I could count it, but I'm really calling it a D. But it's this incredible leg B in the monthly chart that is very... So I had some questions here. JP Morgan, BKX. Oh, he actually wrote the BKX. Banks a new bull wave count on back of deregulation. Yeah, I think that this is an incredible move. I mean, you're talking about something that just months ago was down in the 60s, 50s, and now it's at 85.25. This is really impressive action. So as we're about to go to the break, let me just quickly say that the GC, that's gold is down 12. A gold that made that peak F top, I think it's just not the place to be because the dollar, beautiful action. I'll be right back. Almost a new recovery. Oh, this is exciting. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So, folks, look at this pattern right here. This is a dreaded H pattern that can turn into an M-shaped formation. On this chart, this is from my CD introducing the Chapman Wave methodology. So you come down, you make an H pattern, make another H, and then all of a sudden it starts to enlarge, and that lowercase h becomes a lowercase m, and it becomes a continuous pattern. Whoa, wait a minute. Haven't we seen that before? I wonder if I can do this now. Let me just see if I can rotate the chart clockwise. Let me see if I can do that one more time. Never thought of doing it like that. There it is. So you see that pattern there? You see the H's? In this case, it's the U pattern. Of course, it's going backwards. I wonder if we can see previous rotate, select, rotate clockwise. Okay, and this one we can only do it clockwise. That's all right. All right, so you see this pattern right here? Wait a minute. Isn't that the same that we've been talking about for so long? This is the dollar, and I've been saying, based on the Chapman Wave methodology, this is a pattern we've seen many times before. And what happens is that the U-shaped pattern can produce a deadline, that is a resistance level at the top, but you can squeak to new highs. And we're at 100.22. It's hard to believe that over a period of a couple of weeks, we've been talking about this and saying there's every bit of evidence that suggests, based on this formation, not on the technicals, but on the technical formation of the pattern itself. I mean, don't mean technicals on the pattern. I mean technicals on the MACD and the slow stochastic. But based on the pattern, that there is, and I drew it in a long time ago. I said there should be, based on my left side, right side price time match from that was taking from right there, 102 point. Sorry, oh, it's a continuous. No, that's it. From 101.81. Why am I choosing that one? Sorry, I didn't mean to take time here. Oh, from the 99.25 high of August, and then if I push this back right to this high, there it is. So 102.15, there it is. I knew I'd find it. From March of 2003, a left side, right side price time match takes you to, let's see, February of 2017. The Chapman Wave pink rising trend line, this is called the Chapman Wave target inside wedge, and that's that target line, should take you, and it should cross right there, and it should cross February of 2007 at 102.15 level. where we are now in November, and we are breaching the trend line resistance. And that suggests that there's a real good chance that we're going to go to 100.51 for a leg D in the monthly chart of the dollar. And that'll start to improve. In fact, if that happens, there's a good chance, well, we have to wait for the end of November. But if the MACD crosses positive by the end of November, we could go even a little higher for a little while longer. Isn't that interesting? So then I was asked about, could I look at the EUR, the USD, I believe it's the euro dollar, that we will want to, EUO. Okay, well, this is going to be right here. So the same pattern that we were looking at, look, there it is. Patterns repeat over and over and over and over and over again. Remember this pattern right here? Let me get it back again. I'm going to have to go to rotate clockwise. I'm going to go to rotate clockwise, and there it is. The dreaded H goes to a lowercase m, and we can see it right here, the lowercase m. What is the suggestion? Suggestion is that the dollar goes a little lower, a little higher, and the euro-dollar currency pair goes a little lower. And the big thing about it is at 1.071, will it test the 1.053 level made in December of last year? And my suggestion is yes, it will. And that would give you a full arch formation right here. I'm not going to take time to do the left side, right side price time match, other than to say there it is in the weekly chart. All right, we've broken trend line support. And now we're going to have to look for other support levels. The next one will be 1.070, and we're at 1.071. All right, so the euro looks very weak, and now we want to look at some other things. The TLT. The TLT is trading at 122.14, up 9 cents. What is it? It is the iShares 20-year Treasury Bond ETF. Had an incredible smash, one of its deepest corrections to the downside that I can recall. We've had this kind of move to the upside periodically, but not to the downside. And that puts my thesis that I've had for, I don't know, is it 20 years? I don't know how long. In the 1990s, after Japan went down to 0% change, and then in the 2000s, it kept going lower and lower and lower. And my thesis was that eventually, at some point, the U.S. bond yields will become Japanized as well, and they will go lower and lower. So this is going to be very important. Is this a tidal change? Well, if I'm calling this a leg E, and I have to wait the month, but so far it does look like it could be an E in the TLT. It does look like in the U.S. T-bond 30-year Treasury pattern that we're looking at. I just want to see, was that a lower low? 161.21. No, it's parallel. So this is still C. Oh, it's still C. And we're going into resistance right there. Oh, this is tough stuff. Okay, so what we're looking at here is that within the Chapman wave channels, this is a long term. This is a 30-year channel. It's going to be very important. We are in the buy zone of bonds. If the bond breaks 149, it's at 154.5 right now. If it closes on a monthly basis under 149, we've got to take note of that, because that says there could be a peak G top, and that could be a serious, a multi-year top. I just don't know yet. I don't want to go there. I'm just saying that's what I'm looking at. Let's wait, just have a little patience, because there could be a little bit of a turnaround here. I am expecting that the market is going to be pulling back, and we'll watch it closely. Now, there are a couple of things that I want to look at here. So we did the dollar, we did that. High-grade copper. What is happening with high-grade copper? Pulling back a little bit after that sharp leg E/A on the daily chart. But it's that weekly chart that says peak C repelled at the 200-period moving average at 2.68, trading now at 2.51. Up 0.01, and this is going to be very important because it impacts the monthly chart, which was looking really good just last week, and now it says there's a very strong resistance at the 200-period moving average in the monthly chart as well, and that's at 2.55. The weekly is at 2.68. So we're going to be watching this very closely. I just want you to do this for a moment here. This is the 2-minute E-mini chart. We've just had a bounce from a trough E, and now it's in leg B, but it could be I got a feeling it's going to make an arch formation, and come back down again. So we're watching this, and as I said, a break under 21.54 would be quite negative. It really needs to get to 21.62 or higher and hold there for a good hour and a half. That would be positive action. I think it's going to be tough to do. All right, so that was the question, and let me just go now to, so that was the BKX index. So Goldman Sachs has had a spectacular move, another big move today, 470 at 208. Just what? 5, 6, 7 sessions ago, it was trading under 181 and is now it's at 208. That is a spectacular move to the upside. It needs a little bit of a breather, and we're going to be watching it. But mostly what we're looking at is the all-time high was 218.77. 2 months ago, it was trading at 160. In 2 months, it has the potential here to retest the 218s. Unbelievable. Very, very good action. The Trump rally has selectively chosen sectors that are really benefiting. I'll be back. Basil Chapman, Tiger Technicians Hour, Dow's down 8, S&P's down 3. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So looking at my weekly, this is called my triple yield weekly chart, which I show subscribers. Look at this huge single leg A up, not single leg A up. It's a huge leg E to the upside. And this is the 30-year in white, 30-year T-note yield. So T-bond yield. This is the 10-year T-note yield in leg F, and this is recycled. That'll be the most amazing thing. If this is the first time I would ever see an instant restart to the upside in the yields. Downside, we've seen that, but not to the upside. And leg F, and it'll be probably F/B. in the 5-year note. Now, this is going to be really impressive because now I can say, remember that line? I always keep this horizontal line just to show that we've been here before. But now we're in an area that says consolidations to the upside have broken down very often at D and E in about at this line in the 30-year. And what we're looking at is if this is E and there's only a modest pull, sorry, if this is E/A and there's just a modest pullback, and then next week we've pulled back, the following week after Thanksgiving. When is Thanksgiving? Soon. We start to move higher. That has to be a recycle, and then you're going to be looking at 32.55 instead of 29.78. That was the high back in June of 2015. So far, this is really impressive action in yields, and it's the first major move to the upside that has, after the extension has continued for a couple of months, quite a couple of months, you've got an extension to the upside that just broke out in almost the same degree. Look at this. From here, from last week's low of 25.78 in the 30-year to trading to today's high of 30.30. That is a huge move. I mean, that's a 18% almost, right? So that's just in the yield. And that's the first time we've had that kind of breakout. I also want to show you what the impact was. Look, here is the weekly chart of the Philadelphia Housing Sector Index. Made a peak D. Remember, those peak Ds are really important in the Chapman wave at 256.81. Pulled back to 220. Yeah, 220.62 in November, and now it's having a little bit of a bounce, but only a little bit of a bounce. What is impressive, is almost like high-grade copper, is wood. The iShares Global Timber and Forestry ETF is about to test its high that was made recently of 51.17. If it takes it out, 51.18, and it's trading at 50.80 right now, all of a sudden I'm looking at not a G/C, but probably a leg C to the upside with a brand new buy mode in place. That should impact positively the Philadelphia Housing Sector Index. I wonder if I can just bring this up. Yeah, look, this is the South African, this is the Dow Jones South African Stock Index. Made a peak D, comes back down very sharply, and this is not the actual index, this is just based on the index at 425 back in April of 2015. 425 goes down to 228. I would call that a pretty big decline, of 1/3. And then what happens is it rallies up, and now it's making that arch formation, the right shoulder failure in the Chapman wave that gives you the dreaded H. I'll even put it in. We've got to be real careful. This is the stock index. So they do have, as I recall, I haven't looked at it for a very long time. Being a former South African, I used to watch it all the time, haven't for years. But in fact, this does not have, it has some gold stocks, mostly industrials, etc. So this is going to be very interesting what happens. Now, let's continue. I wanted to look at crude oil. I had a question about crude oil. Okay, I'm going to go to, on the way to that, I'm going to go, because I want to go in order, otherwise I'm liable to go out of Procter & Gamble. So Procter, I'll go to oil in a second. Procter & Gamble, yes, it's actually like the Eiffel Tower. This is impacted by the dollar. Look at that peak C, and it could be a C minus. It could be the same right shoulder failure that we just looked at in the Dow Jones South African stock index. So this is going to be very important because at 82.86, down 72 cents, if Procter & Gamble, PG is the symbol, takes out this low right here, the low of July of this year at 80.95, then 79.40 will be the target I have for Procter & Gamble. That's 200-period exponential moving average. Not good news. So I hope that answered that question. Going in order, Judy wants to know USO. Okay, now we got to the USO. So the USO, whoa, is down 18 cents at 9.58. But there's that pattern. The lower, you remember I drew this in, the H, there it is. There's the first H. This could be actually more like a large H. I wouldn't be surprised if crude oil has this kind of configuration over a period of 6 months, that it's just constantly making these H patterns. It's just fading. back in the USO, stops in the high 11s and goes down to the low 9s. And then it tries to bounce again, and that's that pattern. So, yeah, this is a 1H, and there's the lowercase m, but I'm just going to be very strict and call it, right for now, a large H formation. So, yeah, but you can see it right here in the monthly chart. It could not rally and break and hold above the 9-period moving average of 10.87. It's trading at 960. Now, bad news. So the SCO is a question I had. The SCO is the inversion of that, and it's in leg D. So maybe we're getting close to some kind of and that should correspond to a market. No, now that was up 8. This is just a relentless market. It's very difficult getting in on the long side because you're giving up 10, 12% already. But we will do that because we want to be adding on all the dips to the long side. It's interesting that on the short side, we're still short the SMHs. Look, not good action, down to 67.92. I would put it at, in the weekly chart, I'd just say maybe it's a rectangle formation that needs time rather than price. But really, it didn't participate at all in the monster move to the upside. So let's go. Now we can get to the next question, which is, John wants to know, hi, would you please comment on YCS? Wait, YCS, is that the rail? What is that? YCS is? Oh, profit shares, ultra short. Oh, yen, of course. This is the ultra short yen. So now, ultra short yen. It looks like the SCO that I was just looking at. So let me do the Chapman wave notation here. We're going to go from this low right here. You always have to pick the lowest low on the left side. 58.96 on the 18th. Rallies, and it goes peak A. That's not a peak there, no. Peak B. Pulls back sharply, and it's incredible how often this happens. Look, start another little buy mode and goes A, gray B, and then finally it breaks that left side low, and it's what I call an overlapping wave count, Chapman wave count. And now we go C, and we go to D and E. And then what happens in this overlapping wave count, you should theoretically go back to the lip, which is at 64.25. Well, lo and behold, the YCS goes to 65.61, and then where does it come back to? It breaks the low, goes to 63.35, and now we're on the way up again. Is this A, B, or is it F, G? I'm going to call it A and B for now. We'll have to make a change if it drops too much. I'm calling it brand new A and B. No, I want to be strict. G/B. You can call it, because the MACD is good, and stochastics is 97%. I really think it's like a B, but I need to talk about the yellow line, which is the 200-period exponential moving average. Basil Chapman, target conditions out. We'll be right back. Dow's up 13, S&P's down 2.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
10-minute chart, the E-mini did the test. It hasn't actually touched it yet. That is the 2153 level from the 10 past 3, 11 low. And but we did go to the, let's see. We did go to 2154.25, so it's real close. So you've got, if there's a left side, right side price time match, then you've got until 12:30 to try to test that 21, what did I say it was? 2153 level, yeah. So we'll see what happens there. In the meantime, it's a digestive day. So where was I? I was looking at the eye for John and, let's see, I think John in Sarasota. You know, I never ever went to Sarasota when we used to do all those courses down in Florida. I promised myself that one day I would go a day early and just hang around and go drive down and see what's happening because I've heard such good things about Sarasota, but I never did. So I've never been. So, okay, YCS. Okay, YCS, which, as we said, was the ProShares Ultra Short Yen. And I was looking at the EUR USD for the euro. Now let's go to the USD JPY, which is the yen. This is the long side. And this spike to the upside, you really have no choice but to call it. Oh, A is there. Yeah, this can be called F/A because of in the Chapman wave, if you don't break the left side low, the start of the previous buy signal to buy mode, this could just be a mere extension up, and its leg C in the weekly chart. Yeah, this is actually looking quite good. It has the same directional move, not the same price action, but the same directional move so far as the dollar. It's moving up, and it's broken above the 9-period moving average very sharply, which is at 105. USD JPY currency pair is trading at 108.37 up 1.75. Very, very strong. One of the big strong candles. We haven't seen that for a while. Above the 200-period moving average. Let me show you the importance of this 200-period moving average. The last time we were here, that is above, was just momentarily for one day back in January of 2016. Before that, we were above it going into the December high. And then when the December market tanked going into January, it pulled back as well. So this is very interesting. It's taken 10 months, almost 11 months. And this is the first time that it's really substantially above the 200-period moving average. Can it hold? And the question is easily answerable. And it's answerable by saying, if the MACD continues higher, which it is, and the stochastic at 96 does not break 93% in the next 3 sessions, my answer is yes. My answer is then we're looking at a huge bowl formation like this. And where would it target? We could do a left side, right side price time match by going from the high that was made back in May go to the, I have to pick a particular candle right there. That's the doji candle for now. You know what? I think it's too close, but I'm going to keep it for now. Let's see where that takes us to. That's that doji candle right there. I think we missed it by a day or two. So we'll go new parallel, and it takes you right to there. Oh, that's very good. Okay. So the left side, right side price time match that I'm choosing right now says that by the 16th of 14, 15, 16, 14, 15, by Wednesday, oh no, that's way too high. By Wednesday, the USD JPY should be trying for 110.43. I at 108 point, that'd be spectacular action. I'm not sure that I can go with that, but I am going to put in the left side, right side price time match with the Chapman wave inside wedge target line. I'm going to take it from here. I'm going to go right there, and I'm going to say, yeah, that's just, I don't think so. I think it'll get there, but I think it's going to take longer. Anyway, I'm going to keep this for now, and we'll see what happens. All right, let's continue, and we're going to go to, here's a question that I had in the den. Could I look at the GDX? GDX? Yeah, the GDX, see, it's gone in this arch formation and broken the left side low, which was at 22.50. It ran up to the 25.5, 25.60 area. What was it? 25.93 area on the 2nd of November. And then it plunged over the last 3 days, even today. But now it's turned around, and the GDX is up 20 cents at 21.11. This is going to be very interesting. So within the context of the gold miners, it's in leg C in the weekly. It has the pattern that I call, it's almost like the uppercase A, Eiffel Tower look. Let me make this bigger so that we know what we're looking at here. This is what we're looking at. We're looking at 48. We're looking at, there you go. So there's the pattern. Straight up, straight down. And it suggests that this week, I don't even have a trough on the left side. All right, all I can say is the cluster formation between 20.20 and 19.70, and the low today was 20.13. So it's kind of in an area where it might want to bounce, but I have to tell you that the strength of the dollar is going to be very persuasive. I think it's going to be very difficult for the for gold to actually have a sustained rally. It can have bounces, but a sustained rally, down 9 now. If it was down much more, this is tough. Actually, it's down 6 in the futures. So, yeah, I think that, it's D in the weekly chart. All right. Oh, wait a minute. Here's the low that we're looking at. The low was 1209 was the low of June, the week of June the 3rd, 1209. And today's low is 1211. All right, it's getting real close. So this is going to be an absolutely between 12 and 1206. This is the area of containment. If it breaks under the starts to trade at 1202, that's just not good at action at all. And that would suggest that there could be a 382 retracement, and that would take you to the 1182 level on gold. This is going to be very important. And of course, we are, as I say, we are so close to the dollar making an all-time high. The high today is 100.22 as I last looked. Yep, 100.22, and it needs 100.52 to really break out. So we'll see. Not to break out, to start leg D. All right, here we go. Something else that I wanted to talk about. We're looking at, oh man, there was a great question over the weekend. In terms of your I'm going to paraphrase it. In terms of your longer term outlook, what is the difference now in the webinar that you gave? You discussed the potential of maybe if there were 3 Democrats, what would happen, and it was going to be that 2017, the first quarter to between 3 months and 5 months would be really important, and that we could make a major top in that situation. And what I said during the webinar was that if it was Trump, there's another set of parameters. There's another dynamic we have to look at. And the only question would be is, will we be, in fact, starting something that in a sense resembles the Reagan years? That's going to be a question. And remember, during the Reagan period, we had the 1987 crash. So we'll talk about that over the coming few days. I'm not going to do it right now. I want to get my thoughts in order to be able to articulate that. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
I had a quick question about Nugget. Nugget is the direction daily gold minus 3 times bull. It's trading at 8.43. The low today was 7.30. Leg C in the 120 and the 10-minute chart. I'm going to treat this only as a trade. I think the question was just as a trade. Where would the support be? $7.89 is the 9-period moving average. It's actually, that's not the support that I'd be looking at. $8.20 to $8.07. To me, if it breaks under that, that's start to be a failure. What you really want to see it hold. And in the next hour and a half, it has to have try for a leg D, and that well, I don't know where peak C is because it hasn't finished the bar yet. But I'll give you numbers. The number is 8.67. If it can touch 8.67 over the period of the next hour and a half, that'll raise the support. And what you want to see is that the dollar, it doesn't have to tank now because it's right on the doorstep of breaking to a new all-time high. Sorry, not all-time high, I mean that monthly high to get to leg D. Just trade it, and all I would do is if you can, take a little bit off at this point in Nugget. Let me go back to NUGT. If you've had a nice move to now, I would take a little bit off. If it goes to the high is 8.55. If it goes to 8.67, I take another little bit off, and then normally I wouldn't say this. This is the one time I might be thinking of holding it overnight because I think the dollar is going to spike one more time, make a new high today, and then give back some of it tomorrow because it's right at the doorstep of very strong resistance. So the gold could have a little bit of a bounce that's been smashed to the downside, but treat it only as a bounce because I think this dollar actually is going to go higher. Hope that helps you. Next question was, where was that question? This is a good question. Kind of dealing with what I wanted to say before. So the XLK is the S&P Select Spider Tech, Select Tech for high tech Spider Fund. So it's the tech index, and what we're looking at is it's down 72 cents at 46.01, minus 1.53%. This is a leg E to the downside, but it doesn't look like it wants to hold yet. And it's arching over in the weekly chart. That's what I'm looking at the Q. So now here's the question. The fact that we have reached leg D up in the Dow monthly, and I know as of now the month is young and the other indexes still have time, what does that signal us from the Chapman wave point of view? It signals a bunch of things. At this point, I want a mixed market. I want there to be enough questions out there that nobody gets 100% bullish. No, that the media and the newsletters don't get 100% bullish. That's what I meant. I like this mix. I think trying to get in individual stocks, there are a lot of stocks that are breaking it and doing really well that have potential to do even better. Oh my goodness, I'm looking at you. I can cry when I look at this. We had this darn thing. U.S. Steel trading at 27.39, up $1.68, up 6.5. I mean, what can you say? This is still, even with the gaps, this is still F/A. And it's almost breaking to a new to leg C. Wait a minute. It's just started leg C, 27.83. It started leg C in the monthly. So you've got the rotation through the different sectors. And now what's out are the interest rate sensitive guys. So this is very interesting. So the answer is, I love what's going on. I love the fact that you've got selectivity. I love the fact that the Dow is the leader. I've been wanting that for 15 years or more, to see the Dow become a leader again. Actually, it's more. It's since before 2012. I'm sorry, it's before 2000. And we just haven't seen the Dow really be the leader. I want to see that, and we'll see what happens after that. Expect some kind of a digestive phase right now for the next day or two, maybe three. And then I think we start to go to new all-time highs in the Dow, and the S&P will follow, and at some point fairly soon the S&P will suddenly have a spike to the upside. But I love the mixed market. This is what you want. You want apprehension out there. Every time it looks great. Basil Chapman, stay tuned for you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.